Good afternoon, everyone. Quick show of hands, who is an experienced angel investor? Been doing it a long time. Okay, about 5%. Intermediate, dabbled, done some. Okay, and novices, beginners. Okay, wonderful, great. So I'm an entrepreneur of 30 years, an angel investor of 15. I have had more failures than successes, so I'll share some of those with you and some of the lessons that came from it. But I'd like to start with a quote from the Terminator, big old Arnie, and he said, "Money doesn't make you happy. I have $50 million in the bank, but I was just as happy when I had 48 million. It's all right for him to say, right? Yeah, we're here obviously talking about money, but money is not necessarily the only reason people do angel investing. You'll all have your own goals, your own ambitions. Some people do it because they're coming up to retirement or they have retired and they want to share that wisdom and knowledge. Some people are much earlier in their career in the beginning and they want to make as lot of money as quickly as possible. All right, so we'll come on to the different strategies. There's no right or wrong way. The only real right way is the right way for you. So that's the agenda. Slightly unusual, quirky, intriguing topics, bacon and eggs. You're going to have to choose one of those two. Start with why. Time versus timing. Beware the sevens and eights. Relates to people. Sotsog, a bit cryptic. Tax tails and dogs. Plan D, when plan A, B, and C fail. What is plan D? And then at the end, we have 20 books on our stand downstairs, which is a great book. Jason Calacanis, he's a really experienced angel investor, one of the early investors in Uber. And there's a podcast, if anybody heard the All In podcast? Yeah, All In podcast is great. Jason's one of the investors. How to invest in technology startups. Timeless advice from an angel investor who turned $100,000 into $100 million. Okay, so some really great stuff in there. And then there's also a masterclass for free if you would like that. So, success leaves clues, failures are inevitable. So my biggest kind of entrepreneurial success of an idea I came up with, a business I founded, scaled and then sold from 2007 through to 2020, was 7,000 residential rooms. So I bought 20 houses, converted them, high quality accommodation, HMOs for people in the property sector. Did my first one back in 2004, had 20 by 2007, about a 6 million portfolio on the south coast in Bournemouth and Poole. And then I franchised that business model. 13% yield, so they threw off a lot of income. And we had over 300 franchisees. So it was a fantastic experience of taking an idea, scaling it, 30 staff, about 40 million rent roll per annum, and interviewing hundreds, if not thousands, of potential business partners. So I got to see what made some successful, what made others fail, and that learning was really useful when I moved into investing. So made a load of investments. I'll show you one of my bad ones in a minute, but this was a great one. We partially exited. So Triple Whale data and analytics platform. It went from pre-seed when we invested at $5 million to $400 million with Shopify as an investor. It's still going, it's on track for a multi-billion valuation, or that's their goal anyway. But we did a partial exit at Series B, so we sold 30% of our shares, okay? Because a lot of investors, and I did this, I've still got some investments I made in 2006 and nothing's happened, I haven't made a return. So when we invest, we tend to pull out some money within 2-3 years or so, okay? So we actually make a profit and then we're in for the ride, okay? And after tax and dilution, that was a 3,360% return, all right? Which sounds remarkable, it kind of is. Don't expect to be able to do that every time, okay? But it is possible if you've got the right strategy, the right team, the right place, the right time. So let's talk about a quick failure. Residential property development prior to the global financial crisis in Romania. It was decimated by the GFC with funding. It just bimbled along. It went down to about 10 to 20% of the value, the land value. And then at the end of March, we should get the second half of our 70% back. So we've had 35% back, we've got another 35% to come. So 17 years, and we're all going to come out of it not making any profit, but just getting 70% of our capital back. All right? And that one was just about persistence. We could have given up on it, but persisted for that period of time. Great development partner in Romania, stuck with us all the way and managed to build it out and get it sold. But it was still a loss, right? That is not a successful investment. And the clue is in the name. Cryover is the name of the city, and I have done a lot of crying over that particular development. I should have kind of figured that out right in the beginning, shouldn't I, really? So there we go. So this is our investment thesis. I'm going to talk about your investment thesis in a minute. So we started in 2022. We created Bolt Angels as a company on the belief that there would be an economic correction. And that would lead to the 4 Ds, very common in property. So distress, and you have debt, divorce, and death. Sound quite depressing, but actually it's an opportunity to help companies that are in trouble. And when funding gets constrained, we believe that we would get better opportunities to help companies. And that's exactly what happened. The 2 businesses that we've invested into, Jack and Cudo, that I'll talk about in a second, I believe if it had been a bull market, we wouldn't have got into those deals. It would have been, they were such good investments. We were able to do them because of the timing. Okay, so positive social impact, mental health, post-COVID, mental health crisis. So that was one of our investments. And then sustainability, and then AI. We were just kind of lucky that the business that we invested into was also a really AI-focused business as well. Investing very early, pre-seed, and to seed stage with 20 times return. All right, so if you invest in something at like 3 million and it gets to 15 million, okay, which can happen from seed through to late seed or Series A, you know, that's a 500% return post-dilution. Pre-dilution, okay? So getting in early, but it means that you're going to be investing in businesses that have a higher degree of risk. A lot of things are not going to be working as they should be, all right? And you need to kind of go in, or the company you need to work with needs to fix them. Be very active. We always take board seats. We run the finances completely for Jack. We are, my business partner, general partner, David, who's an accountant, one of the best finance guys I've ever worked with. He's the CFO for Cudo. He's the CFO for Jack. He's also the MD for Bolt Angels. So we want to know that the finances are being run in the right way. We review all the legal paperwork. Very, very active strategy. Community value add values aligned partners and advisors, which we'll talk about later. And then who's heard of the creator economy or the influencer economy? People like Mr. Beast, the Kardashians, personal brands are becoming massive. You know, Elon Musk, you look at Mark Zuckerberg, you look at, you know, all of those people in those industries now realize the value of a personal brand. Okay, it doesn't have to be around one person, but it drives massive value for a company if you get it right. And then we wanted to have a laser focus. We were going to do 10 investments over 5 years. The reason that's in yellow is because that strategy changed, okay? When the facts change, reserve the right to change your mind. One of my favorite quotes, okay? And the facts change. And how did they change? We pivoted into a small holding company because those businesses are going so well, have got massive traction, are both on path for profitability in just our second year post-investment, okay? And are scaling massively in really exciting sectors. So we put 3.8 million into Jack over 2 rounds, 2022, 23, and then 2.9 million that we put into Cudo. They're both getting ready for a Series A this year. And then Cudo is also looking at 100 million financing facility. So what are they? Sorry about the formatting. So what are they? It's a mental health tech platform where we have people like Davina McCall, Paul Merson, the Arsenal footballer, England footballers, Marcus Smith, the England rugby player. We've used that celebrity status as well as world-leading experts on a whole range of mental health topics, okay, where you can just go on. You can't quite see it there, but Davina is sort of sitting in the chair, you know, come and have a conversation. You click a question and she'll answer it straight away. All right, so they come into the studio, we film about 100 to 200 questions, and you can get answers confidential. It's completely free for the world. We want that. The .org is going to be free for the long term. And we have a Robin Hood strategy as a business model, rob from the rich or take from the rich to help the poor. We work with large corporations and companies, Bupa, NatWest. We're not robbing from them. We're giving them a mental health tech platform for their staff with things like burnout and anxiety and depression at work and menopause and those sorts of things. So in January alone, Jack banked 2.4 million of revenue, right? And it's only had a commercial product since July last year. All right, so if you do it in the right way and you bootstrap, you don't give companies too much money, they can accelerate, and we're very focused on getting to profitability. All right, I'm not a hit and hope, wait for the long term, you know, put in 10 million and it'll be profitable in 5 years. Aim for profitability, have that kind of approach and mindset, okay? And then once you're profitable, then you've got a lot of different choices that you can kind of make. Cudo, the Airbnb of cloud computing. Matt, give us a wave at the back. Matt is the inspirational, incredible founder. He's a mini Elon Musk in the making. You'll see the complexity, the technology, the team he's got. Very successful, exited entrepreneur, built the UK's leading data center business, sold it for 20 million in 2016. So success leaves clues. People that have built businesses and sold them is a good sign. And it's providing NVIDIA H100s and other high-performance compute, which is just exploding in the AI space. And they're also doing it in a much more sustainable way. All right, 3% of the CO2 emissions come from data centers. And what Cudo are doing, either investing in sustainable projects or utilizing existing capacity, so new things don't need to be built. Okay, so back to the agenda. Bacon and eggs. How long we got? 10 minutes, great. So chicken was involved, but the pig was committed. Okay, and a big choice for you. I agree with Jim and his strategy. He said if you're going to be an angel investor, you either do it full time or you invest with people that are doing it full time. All right, and I'm quite binary in that regard as well. I did it myself for 12 years. Okay, angel investing. I like the person, I like the idea, right thing, right time. Not a single one of them got a payday. I've just got locked capital. All those businesses failed because keep the main thing the main thing. So this is Marcus on the Jack platform. And again, do you think he, became an England rugby player and got into Harlequins by doing it part-time? No, he dedicated his life to it, to do it professionally. So number 2, start with why. Most people spend more time planning their summer holidays than they do the rest of their life. Right? Let alone their angel investing strategy. Okay, so people are not even planning like where they want to be. So I'm a great believer in one-page plans. You don't have to have a massive thesis, but have a written one-page plan. Are you going to be full-time? Great. If you are, then that's your plan. Or if you're going to invest with professionals, that's your strategy. Do a SWOT. Strengths, weaknesses, opportunities, and threats on yourself. Where are your strengths, right? One of my strengths is I've mentored thousands of people. I've recruited hundreds of partners. So when it comes to choosing the right people to put in a business in the right seats, that's one of my unique abilities, right? So I know that's a strength and I double down on that. I'm not great at really detailed financial management systems, so I've got a business partner who's incredible at that. All right, I'm not great at going out, networking, meeting incredible people, bringing celebrities. John Reynolds at the back is amazing. He brings a lot of the celebrities. The reason we're here today is because John interviewed Jim Mellon on his television show, Extraordinary Life Stories, and that's why we got here, right? So build a team around you that are really strong in areas where you're weak. How are you going to measure your success? Both hard and soft metrics. How are you or the company mitigating risks? And what is your or their investment thesis? Okay, number 3, time or timing. There's no right or wrong. Some people, Warren Buffett, the best holding period is forever, right? He buys things and never wants to sell them, but he's dealing in billions, trillions, okay, and doing long-term holds on blue chip stocks, all right? Very, very different. We're different. We are about timing. Okay, so getting in at that early stage of something like mental health technology, AI, sustainability, the provision of that type of compute power. We like to get in early and early stage in the business as well, because you can get that much faster growth accelerator. 2 other examples of timing. So I obviously went into buy-to-let from 2004 quite heavily right through to 2020. If I look back on that as a kind of a cycle, I probably got in a bit too early because there was the global financial crisis. All right, so that was a blip for the business, but we had a very high yielding strategy, so it worked. We were able to get through it. But really, buy-to-let boom. There was one previously, and it started around about 1995, but was really, from my mind, 2010 to 2021. All right. The picture is me there with Cherie Blair, Tony Blair's wife, a barrister, QC. We took the government to the High Court in 2016 over Section 24, which was a tax on mortgage interest, right? A tax on turnover, outrageous. Never been done anywhere in the world, decimated the rental market. They phased it in over 4 years, so it was like a ticking time bomb. That's why rents are so high. That's why so many landlords have exited the market. You could say, opportunistically, that's a great thing for landlords, actually, but I fought against it. I just thought this is going to just widen the divide, and when a Labour government get in, they're going to crack down on landlords and put in new rules and regulations. So I saw the writing on the wall in kind of 2016, all right? And I thought it would take a little while. So good example of seeing how a market cycle goes. If you do buy to let, I'm not knocking it. If you're thinking about doing buy to let, you can still make money if you've got the right strategy. Okay, it's horses for courses, but that's me, been there, done that, got the t-shirt. Cloud infrastructure, Web3, NVIDIA, high-end compute, blockchain, tokenization, all of these things, great time in my opinion. So quick poll, who's invested in digital currencies? Bitcoin, Ethereum, anything else? Okay, who thinks they're worthless pieces of nonsense? Okay, and who thinks it's actually a good time for digital currencies? Okay, great. So, not going to give you a yes or a no, but I will make some observations. SEC, ratified on the 10th of January, exchange traded funds. That led to, in February, Grayscale and a number of other very large institutions, massive institutions around the world, BlackRock and others, piling in, having their own ETFs, okay? Bitcoin halving, if you don't know about it, find out about it. Very interesting what that does to the market every 4 years or so. And then yesterday, Bitcoin reached its record high of $70,000. The missing piece for most of these currencies, in my view, okay, is utility. All right, so gold can be amazing investment. Jim invests a lot in gold, but where's the utility in Bitcoin, right? It's just a store of value, an exchange. Whereas if you can actually put utility, there's a purpose to these things, which is what Cudo have done, okay? And one of the reasons we invested, they have their own token. People that are buying compute power and selling compute power can transact in the Kudos token. It has utility. And when people see that that token is going up in value, it's actually a medium of exchange for a service now, okay? And that, I think, with AI is going to come in more and more and more, and that, I think, will be a massive game changer, okay? So I was a Luddite, literally made my first investment in the Kudos token last year. It's just like, this is a load of nonsense. It's a Ponzi scheme. You see all the, markets kind of getting decimated and fraud going on, and it's growing up as an industry now, and you bring utility into it with the kind of regulation that's coming in, it's a game changer. So we invested in 2 tranches into the Kudos token. Okay, we got a great price because we were doing it early on and supporting and helping the team. All right, so we invested 390,000 in 2 tranches, which is, as of this morning's value, worth 3.5 million. Okay, so if you get it right, and this is not just us picking a bet, we're inside the company, we're working with Matt, we're working with the team, we understand what the drivers and the levers are, we can influence the marketing, it's got utility, all right, and then that was the former peak of the token, all right, so we're doing everything within that business to drive up the value of that. And to give you an idea, there's a competitor in our space, okay, that is trading a token at $6. Okay, and this we're achieving 10 cents as the former peak price. All right, so that's when you see all these people on social media that have made a lot of money. You can do that. You need to know what you're doing. So beware the 7s and 8s. Just very quickly, I think entrepreneurs that have failed, fantastic. Okay, but have they had a success? If they haven't, then you need to put support around them. All right, and 7s and 8s are either staff or founders of companies that they're good, but they're not great. Okay. And they're the ones you've got to watch out for, because the 1s, the 2s, the 3s, the 4s are pretty obvious. Either they'll leave or you'll leave or you won't invest in them. All right, the 7s and 8s are the dangerous ones. What you want is you want the 9s and the 10s. All right, the people like Matt that have been there, that have done it, that have got the experience, exited a business, got a team around him. All right, he's an absolute genius. How he deals with the complexity of everything with his team, it's because he's been in it his whole life, and he is a genius, in my opinion. Danny, very different, okay? Very, very different guy. He's been on Dragon's Den, best Dragon's Den pitch in history. He's incredibly creative, brand, front man, fantastic individual. When it comes to the detail of the business, we put a team around him to manage all of that. Okay, and our strategy basically changed as Bolt Angels. Rather than investing in 10 businesses over 5 years, we've just doubled down on Cudo and Jack, and we now work for those companies because we think they have massive potential. All right, a lot of angel investors, you'll see in that book as well, spray and pray. Right, make 10 investments, make 20, make 30, make 100, and hopefully one will hit the big time. No, narrow focus. Right, imagine if you had 10 children, right, as opposed to 2 children. Right. who's going to get the best parenting experience? Probably the 2 kids rather than the 10, right? It's the same thing. We want to nurture amazing businesses that we've got and take them as far as they can go. Sotsog, stand on the shoulders of giants. If I've seen further, it's by standing on the shoulders of giants. I'm a great believer. You go through life reaching a hand up, asking for help, and reaching a hand down, helping people as well. These are 2 of our giants. So Jim invested in Jack. He was talking earlier with me and Matt about investing in Cudo, which is high praise indeed. And then Mo Godat, been on the Stephen Bartlett podcast. He's a leader in AI, good friend. I see Mo on a monthly basis over in Dubai. We've got an apartment in the same building. Not the same apartment, same building. But yeah, amazing human being, written great books on happiness and AI. And he's an investor in Jack as well. Tax, tails and dogs, just quickly. I'm a massive fan of EIS and SEIS. Okay, you've all probably heard about that. But if we'd have wanted EIS or SEIS, we wouldn't have made that investment. Okay, that wouldn't have happened because we'd have missed out on it because it was US based. We still made, after dilution and after tax, 3,360% return in 3 years. When A, B, and C fail, there's a thing called Plan D. We made a small investment into this business. If you've got locked capital, you've made angel investments, they're not going anywhere. Plan D is a way of getting up to about 30% of that money back without the company kind of failing. So look it up. The details are there, or you can speak to the team. So just to wrap up, in terms of next steps, Jack is at Series A. So we closed the seed rounds last year. Some EIS remaining, minimum investment 250,000. And then Cudo, Series A, again, 250,000 minimum. That really is VCs, family offices, and then big debt providers like Macquarie, we're negotiating with at the moment for the 100 million facility. And then the bit in the middle is the capital partner from 25,000. So we've got a community of like-minded angel investors that work together. We have a lot of social events. They want to invest, get all the benefit of Jack and Cudo from when we invested right in the beginning. So they get benefit of everything we've invested into in the past and benefit of everything we invest into in the future. If you would like to find out more, we've got, I think, about 15 of those books on the stand. The team are at the back, and then they'll tell you about the Angel Investing Masterclass. Thank you very much for your time. Thank you very much.